Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we're going to talk about resistance. We're going to talk about diagonal resistance breakouts. So if you are new to technical analysis and this is a new concept for you, you're in exactly the right place. The reason that I decided to discuss this topic with you today is because as I looked at chart after chart after chart, I saw an abundance of these types of patterns. And so I thought I'd go with the flow of what the market is giving us today. My name is Barbara Armstrong. I'm a coach with Charles Schwab. I appreciate you guys hanging out and waiting to join this webcast as we had some technical hiccups along the way. If you are not following James and I in the land of X, you are missing out, my friends. My handle, Barb Armstrong CS, and James's is James Boyd CS. And I just want to bring up the chat. So just give me 1 second here. Okay. You know what? It's up here. Just so that I can kind of be able to answer your questions as we're going along. And let me just bring this down here. So I have multiple screens happening. So let's just get right down to business because I know that we were off to a slower start than normal this morning. Okay, so know that we're going to look at a lot of examples today and know that all the examples that we're looking at are for illustrative purposes only, not to be construed as a recommendation. This is a technical analysis class and we're discussing technical analysis concepts in it, but knowing, what the fundamentals kind of bring to the discussion, knowing what's going on in the news, what's going on politically and globally. There's been a lot of tariff talk lately and it's been, it's on again, off again, and that certainly had an impact on the markets. So being aware of that in addition to your technical analysis acumen is important in making an informed decision. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn and to make sure that you understand your trading strategies and how to place them on the platform, and that you have a plan in place before you consider trading in your live account. And so we're going back to kind of week 3. We have spent the last 3 weeks talking about different types of price patterns. And this, diagonal resistance breakout is a price pattern in and of itself based on resistance lines. So we'll get into that in just a minute. I do have one announcement I want to make, and then we're going to talk a little bit about the basics, not as much of support today, but rather resistance, which can become a support level. And we're looking at ways that we can identify that. We're going to look at a lot of diagonal resistance lines and their purpose in helping us make more informed trading and investing choices. And then we're going to bring it all together by looking at a bunch of charts. Okay. So here's my one announcement. Last weekend I was in Chicago at one of the first advanced options events we've done in the last 5 years. We did a trial run back in Nashville in the 4th quarter of 2024. We have another advanced option workshop. This AOS stands for Advanced Options. That'll be in Anaheim at the end of May. I do believe I'll be at that event. So if you're coming, please come and introduce yourself. And all I can say is register early for these rather than later. In Detroit in a couple of weeks, Kevin Horner will be joining Ben Watson at a 2-day event. First day is Intro to Technical Analysis, second day Intro to Options. And these are always great. Somebody in Ohio reached out and said, hey, are you coming to Cleveland? And the answer was no. This will be the closest one to you in all likelihood, but at least it's drivable. And then Kevin Horner, who lives in the Denver area, will be joining Ben for this event at the Gaylord Rockies at the beginning of May. We also have one coming up between Detroit and Denver, and that's in Dallas later in April. And that one might be full, so you may want to check on that one. Okay, so Backroad Bob is saying he's planning on coming to Anaheim. Somebody in James's class this morning, and if you missed James's class this morning, you will want to go back and watch that one in the archives, and the one that he taught yesterday as well. Just so much great content in those classes. Okay. And then Tony is saying he's going to be in Denver. So if you've never been to a live event, they totally blew my hair back when I first started going. It was actually where I met James Boyd for the first time, yeah, so these can be memorable events, and a lot of learning and a lot of linking arms with other like-minded people who are just trying to figure this out together. So, they're great events. So, we talked about this back in week 3, and, when we look at this, because we've now gone and looked at a lot of other things, right? What pattern do you see when you look at this? So Elaine is asking where you can see the whole schedule, and the schedule is laid out for the entire year. If you go to schwab.com/coaching and then go to in-person events, you can see the lineup where we're going to be all year long. But we see here, we have a resistance line. And when it comes up to this line, let me just change my drawing tool. It comes up to this line, all of a sudden, the buyers stop buying and the sellers come in. And we saw that happen here, once, twice, 3 times a lady, and then it came down, came back up again and again. And then it kind of came into that resistance neighborhood, if you will, here, and then again here. And what we saw, let me just change my tool again. But what this ended up creating in this instance was this big inverted head and shoulders. And then with this pattern, what a trader would be looking for is for it to break out, maybe come back and retest, and then go to the upside. And they would measure the distance between the bottom of this pattern and the top. And if this is, say, 50 points, then you'd be expecting, a trader might be expecting 50 points to the upside. And you have to keep in mind that this resistance is a range, okay? It's a range. But having said that, are there patterns sometimes within a pattern? And what I see, if we're playing I Spy with my little eye and we draw a line down here, and what we're trying to do is kind of hit as many candles as we can, or the tops of as many candles. So maybe you draw it like this. Now you may want to come out here, and you could do that also. But if you're saying, well, it looked like it was breaking out here, and then this breakout turned out to be a fake out, and then what we saw, this became a diagonal resistance line that then every time it came up and tried to break out of this almost free fall that it was in. So we had a resistance here, and then here, and then it fell a bit, tried to rally, came up to here, fell, tried to rally, looked like it might be breaking out, and then it just continued to tumble. And then it tried to rally again, fell for a couple of days, and then came back up. And then when it came back up, now we're seeing like a bull flag pattern and, off to the races. But this could be, described as, or is known as, a diagonal resistance breakout. And so that's the pattern within this bigger pattern. Now, that's not to say that we can't just see, this doesn't have to be part of, an inverted head and shoulders or a cup and handle pattern, but we see these patterns within patterns. So diagonal resistance breakout. And like I said earlier, it's a general area and it's not necessarily a specific price. And that makes more sense when we're talking about something that is horizontal. But when you have a diagonal resistance breakout, this diagonal resistance line continues to fall. Okay. And the more times you hit this resistance level and it holds, the stronger it is. I think many of you have heard my analogy. My former father-in-law, he's now gone, but he was really big on medieval history. And from the time, I would say my kids could crawl, they had knights. And, they would play these games with blankets, creating hills and valleys and, riding kings into war. But these knights would protect. And I see that every time you come up and hit this resistance level, another knight is joining the wall. And then when you finally break out, you're looking for some kind of momentum. And, with this chart here, just so that we can see it a little more clearly, when it did finally break out, it moved with momentum, didn't it? Big move here, and then it gapped up. And so, it has been kind of a rough start to the year, hasn't it? If we come out and just let me bring up the S&P 500. So, we're down 2% on the year. So, there's been a lot of angsty moments and a lot of what I say kind of whiplash action that has, to some extent been driven partly by news where, we'd have a big down day and then a big up day and then a big down day. And if we bring out our drawing tool, are we perhaps seeing, and again, this is where the art of technical analysis comes in. Are we perhaps seeing a diagonal resistance breakout where it broke out, kind of climbed over the line, if you will? So it climbed over the line and then came back for a day to retest. Now, does this mean like, oh, this wasn't a breakout, it was a fake out? Well, the diagonal resistance line held. And then we had another up day. We had an inside day. And, when you look at this, it opened lower, closed higher. I always think of that as modestly bullish, especially when, we're just trying to work our way out of, a significant pullback. Like this was significant enough to pull us into correction territory. And then, on the 21st, we had another, it's now sitting on the 10-day moving average. And then yesterday it gapped up. And so far today, we're kind of neutral. It was up at the beginning of the day and is kind of settling in a bit, but currently still above where it was. And so we can look at that as an example on an index of a diagonal resistance breakout. Now, I had these other lines on the chart because it looked like we might be setting up a double top, and then it broke to the downside. But we came down to this level, and let me just get rid of these lines. So I'm going to clear this drawing set. But so, can we look at this? And you're just trying to touch the tops of as many candles as you can, kind of easier to do here on the NASDAQ. And then when did it break out? Well, it broke out here on the 14th, which was a Friday. And when it broke this diagonal resistance line, we're still below the 10, we're below the 30, we're below the 200-day moving average. And it went up for another day and then pulled back. Now, is it uncommon for it to retest? Not at all. And then we had 3 days of kind of consolidation. And then yesterday gapped up really dramatically. And, today, again, following through. And if we come over to the Market Watch tab and we look at the NASDAQ, a lot of green on the screen. Now, a little less green than yesterday. But if we come to the Index Watch and we choose the NASDAQ, we're, about half and half. 48 moving to the upside, 53 coming back down. And if we look at the S&P 500, again, we're, on the lower side, we've got about 40% of stocks moving to the upside, 60% coming back down. And if we then come over and look at the heat map, we can see, a mix of red and green today. Yeah, Fred is asking what's considered correction territory, and that would be a 10% move down off the high. And if you want a quick way to measure that, if we just click on this recent high and then draw our cursor down, at one time we were down almost 14%. We're still down, almost 9% off, that all-time high that was hit on February 19th. And we're still below the 30-day and the 200-day moving average, which is a pretty significant average, for many traders. Now, might we be seeing some of these types of patterns on the charts? And let's just go and look at a number of charts, and then we can, look at how we might choose to place a trade. So on Palantir, did we see, and this is a stock that has been up dramatically in the last year. Year to date, even it's up 24%. And then it kind of got sucked into this, sinkhole that has been the last month in the markets. And then did we see a diagonal resistance breakout here on the 12th? And this was a little ahead of the NASDAQ where that happened on the 14th. And then a down day, not surprising to see that kind of pullback. And then it started to move up and a down day. So now is the pattern changing? Where we were seeing kind of this significant downtrend for a short period of time, are we now looking at, these little, at first very modest bull flags? Yeah. And so, are you going to look at this and go, you know what? I missed it, because the entry was obviously on this day, on the 12th, and I didn't get in that day. So now this stock is dead to me. Not at all. Like, keep in mind, like, if we look at a 1-year trend for this stock, let me just change our time frame. This has gone from $20 to $125 a share. And so there are many points along the way. Like, you may have said after this earnings, like, ooh, it gapped up, and that was probably a 10% move. It may have been more. On this day, it closed at 41. It closed the next day $10 higher. That's a 20% move. Like, in hindsight, don't you wish you'd bought it even at the close of that day? Because now it's trading at 95, you'd be up over 100%. So, you have to keep in mind that you don't have to get the entire run from the first day of possibility to, the last day it continues to uptrend before it starts to fall. If you get that middle 50 or 60% or even 30% sometimes, you can do quite nicely. And so you just have to look at it as like, okay, now today it's pulling back. When it continues to uptrend, could that be a bull flag entry? And what might we be looking for? Well, if this turns out to be our low day, if we were to place a trade, might we be looking for a close above the high of the low day? And, that's something, if you're not familiar with it, you're going to want to write that down. Close above the high of the low day. In traders speak, they'll call that hold. We're looking for a hold. Or you might just say, I believe in this company and what it does. And, if in fact that's how you feel about Palantir, it is a tech stock, and tech has been leading the charge for a lot of the last several years, but it also brings more volatility with it. And, not to say that it couldn't be in for rocky times ahead. Okay, let's look at some other setups. How about BKR? So BKR, when we look at Baker, if I just get rid of these, we did see a pullback, and we've seen a lot of these, right? Like, if we go to let's just go to a shorter time frame. But this has had kind of a choppy ride, but overall has been uptrending. It is up, 10% year to date, so outperforming the S&P. This is an energy stock. And, if we draw this diagonal resistance line, when did it cross? On the 17th. And then we had that 1-day pullback again. Like, do you see a recurring theme here? It breaks out. And then I think it kind of is like, whoa, that was a lot of work. And now I need a little bit of time to recover. So recovery day and then a big move to the upside. And this one, unlike a lot of stocks right now, this is above all the indices. It like all our trend lines, it's above the 10, above the 30, and above the 200. A lot of stocks got sucked below those levels and are still trying to make their way back up. And so, and this is a $45 stock. And some might look at this and say, well, does it have some other redeeming characteristics? And if we come to the trade tab and look at this drop down menu, well, it pays a dividend of 2%. So some might be looking for dividend income. Now, one thing about paper money is that actual dividends are never paid in paper money. So that's one of the differences between the platforms. And two, there's no guarantee that even in your live account that Baker will continue to pay a dividend. I just need to lay that out there. But, from a price earnings perspective, if you are a value investor, some might define a value stock as one that has a price earnings ratio of less than 20. And so they might look at this and say, hey, this has a PE ratio of 15. So if people are still trying to be a little more conservative, a stock like this might check a couple of boxes, and we have a technical entry. Now, are we getting in the absolute first day? We are not. Are we going to spend a lot of time beating ourselves up for that? We are not. Okay. Have I said that often enough now? Yeah, energy is at resistance. So if we come and we look at, and let me just switch this to a watch list. Okay. And then, if I'm going to do this quickly, that we're going to add a 4-week return and a 3-month return. And then I'm going to get rid of these because I don't really care about these. And I don't care about the last price either, but I don't know what the symbols mean. So I'm going to add a description. And we're going to put that, we're going to move this up. Okay. So, and we're going to pick, this is an industry watch list, the sector industries. And I'm going to move this over because S&P 10 doesn't mean much to me. So, and if I link this to my charts, we can see, the energy sector, and, I haven't drawn a new line. But if we extend this to the right, we're seeing a lot of these patterns too. Like this is kind of a double bottom pattern, right? And if I let me get rid of this line. And I'm going to duplicate this one. And if we just bring it down here. So this was trading in kind of a downward range. So this is kind of a double bottom on a tilt. And we've seen a lot of cup and handles on a tilt and inverted head and shoulders on a tilt. And double bottoms on a tilt. And then we've had a breakout on the energy sector. Materials. We're seeing this same thing, although really, I'm not seeing the breakout yet. If we kind of come in here like that. Now, you might want to draw a shorter line and kind of start here. So maybe the beginning of a breakout, but not quite. Industrials. So again, do you see what I mean about this kind of double bottom? But we've got this, it's flirting with it, but it's not quite there yet. Okay. Let's look at GE. So diagonal resistance breakout. Did we see that down here? Here we had kind of this double bottom on a tilt or trading within a range. but we had this diagonal resistance breakout, gap to the upside, 1 day pullback, and then it really took off. And so, you know, paying attention to these things is important. And then what did we have? Breakout, 1 day pullback, gapped up, and now hitting a high. So that's GE. How about Microsoft? Do you see why I chose this topic for today? Now, why am I drawing this sideways line? Well, this was acting as a support level, and we had kind of this head and shoulders pattern. So, you know, the bears were pointing this out to anybody who would listen. You know, we had this head and shoulders kind of pattern, which is not a happy circumstance for the bulls, because if this breaks down, then, you know, the potential is for it to, you know, have this kind of move to the downside. And we saw this diagonal line setting up, as we do within these patterns, and now it looks like it's breaking back to the upside. So it crossed, we had a day of hesitation, a big bullish day on Friday, and then continuing to move to the upside. And so might this be a trend reversal? It might be, but we want to keep in mind that we still have this resistance line, and the king has left a few knights still perhaps guarding this line. We won't be sure until this stock gets back up here and we get the chance to see, is it now acting as a resistance level, or have all the troops gone home, and is it going to blow right through? But we want to at least be aware that this was a moat or a fortress at one time. Okay? Okay. So there's another one. How about FCX, Freeport McMoran? And you know, here's one. I mean, this thing hit a high back here last September. So this thing has been rolling down the hill for like 6 months. This is a 6-month chart. You know, it only crossed the line here back on March, it's saying March 14th. That was a Friday. And, you know, because it was straddling the line, you know, and it had come up and kissed the line here and kind of kissed the line here, you know, and kissed the line here, I'd be going, yeah, I don't know if that's really a breakout. You know, you want to wait for it to kind of cross the river and come back and test the ice. And if it comes back through, it wasn't a breakout, it was a fake out. But, you know, it continued on, didn't it? You know, and then we've had one down day out of what, like 10, 12 trading days? And it's back up to the 200-day moving average now. And so, you know, will it just continue on through? We don't know. And in this case, you know, we haven't seen a pullback. So a trader might put this on their watch list and say, I'm going to wait and see if it does pull back for a few days. Yeah. Okay. Like I've only got about 20 of these, so we're not going to be able to go through them all. And we do want to do a couple of example trades, but you know, here's Monster. And you know, Monster, MSTR. I thought this was Monster. That's another one on my list, I think. This is MicroStrategy. Pardon me, I misspoke. But you know, if we come back to here, I'm just kind of trying to make it easier to draw my line. We could draw it from here. You know, again, this is where kind of the art of technical analysis comes in. It's like there's not one exactly, if you didn't draw your line like this, I'm giving you 0 on the test. But if we look at this, it looked like it was breaking out here on the 14th, and then it pulled back for a couple of days, you know, business as usual, right? Don't go like, ooh, it's a fake out. No, this could be business as usual. It could also be a fake out, but business as usual, then it gaps to the upside. Ooh, so it looks like we've got momentum now that it's broken through the line, right? You know, and it's been off to the races ever since. Now, what might a target be? So again, are we, you know, holding up the loser banner and saying like, I didn't see this on the 14th and I really should have seen it on the 19th. So, you know, now I'm going to, you know, put my loser badge back on. No, you know, if you were doing a swing trade, where might you trade this to? Go ahead and type that into the chat. Where might you, and in the meantime, I'm changing my drawing tool. Might we come back up here? We could. You know, like, and depending on our account size, so this one, you know, we have about a $500,000 account. Could we afford to buy 100 shares? You know, if you say, well, I don't want any one position to be more than about 5% of my account, so that would be a little rich for my blood. I don't want it to be more than about, 25,000. Okay, so could we then come here, and this is just, you know, assuming that you've done your other research, but could we come in and say, hey, you know what, I'm going to switch this to a calculator and say, I've got 25,000 that I want to invest, and this stock costs 338. So I could buy about 74 shares. So, you know, could I do 74 shares? Sure. Yeah. So Mike said, are we swinging? I love your sense of humor. Yeah. 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 So yeah, we're going to do a swing trade. And what do I mean by a swing trade? We're going to, you know, do this as a directional trade. We're going to buy 74 shares of stock and with the intention of selling it when it gets back up around 534. Now we could make it 525 because this day, I mean, it really did have an extraordinary gap and then came all the way back down, you know, but so how might we put that in and where might we want to put a stop? Well, if we really want to give this some latitude, we could say, well, this was acting as a resistance level, so it might be a new support level. And so if I take a look at this number here around this 243-ish, or, you know, we might have an expectation that this line would now hold around 292 and put it 3% below that. So if I took 292 times 0.97, that would be 283, our stop, and it's at 337. And so, you know, what's the advantage of having a stop that's below that 30-day moving average? Well, if we come and we look at the trade tab and we look at the options and we come down to 283. So here's 282.50. What are the probabilities? And this is probability of it touching. It's about a 40% chance. If we have a really tight stop, if you said, hey, I don't want to risk more than $10 a share, so I'm going to make it 328. Well, if we come down here to 325, you've got an 84% chance that it might come down and hit, you know, that 325 level. And so it's basically saying, you know, hey, come take my money. You know, like your probability of being stopped out. Now, this isn't taking our technical analysis into account, but if we want a higher probability of staying in the trade by putting in a stop that gives it more room to move, you increase your likelihood of staying in the trade. And so we are going to come to the trade tab. We are going to right click, buy custom with an OCO bracket. We're putting in our target. And what was our target again? 5, let's make it 525. And our stop is going to be 283. I mean, that's such a big range, isn't it? It sounds weird to say it out loud. Yeah, 525. Now you may want to go and see what the analysts are saying about this stock, you know, and do some more research under the covers, so to speak. But, you know, what we're looking at 283.24. We're going to make both of these good till canceled. And then were we buying 100 shares? We were not. How many were we buying? 74. And then I'm going to click this little firecracker and turn it into a paper clip. And then when I click anywhere else on the order, it will line these all up. And so, you know, our potential for gain is quite high, and we're managing our risk to the downside. Okay. These seem like heady numbers. So this is a stock with a target. So you might do this as an income generating strategy. Now, if this went up $100 and then it looked like it was going to pull back, might we choose to exit the trade? Absolutely. Yeah. Okay. Now, a lot of when we do the surveys, people will say, you know, keep those, you know, option example trades going. And then some people will say, please don't trade options because, you know, I don't trade options and, you know, it makes me nervous. You know, so I like to, you know, try and do a little something for everyone. So do you see we've got a diagonal resistance breakout there? We have one here. This is dash. Let me change this again. And I know we started a little late and you know, so we don't have quite as much time together today. But let's look at Meta. And so here is one, you know, that we could put this in a dictionary beside, you know, diagonal resistance breakout. So it kind of was teasing us on the 21st, gapped up yesterday, and then gapped up again today. So could we look at this and say, hey, you know what? If we give this a little bit of time, do we think that Meta, you know, as a company, and it's somewhat, you know, tariff agnostic in that it's an electronic service, might continue to do well? And, you know, this is a $600 stock. So this is one where we might say, hey, if we came out to May, we're going to give it 50 days just in case there are more crazy shenanigans happening in the market with tariffs and whatever. But could we come out and, you know, this is a $40 option, but do the 620, it's already partway through our strike. We're $3 in the money, and just do a 625 or even a 630. And this is called a long call vertical. We're already $3.50. It only has to go up by $1.25 for us to hit our target. And we have time, if we come out to May, for it to pull back and go up through again. And so we're going to do 4 of these, you know, and so how much are we risking? Just over $1,000. We're risking $1,060, which in this account, you know, we could risk double that, but we're going to do 4 contracts, single order, first trigger sequence, and our goal will be to exit when we've got a 50% gain. So we're going to take our 265 times 1.5, that's 397. And if we're down 50%, then we'll go in and we'll manually exit. So that's 397. And we're going to make that good till canceled. And then fire in the hole. And so, guys, that's our class for today. We looked at lots of examples. And I hope that, you know, as homework, you'll go and in paper money, practice a few of these diagonal resistance breakouts, look at your account and whether you want to be a longer, you know, term investor and look for an entry that way, or a shorter term investor, you know, where you want to be into something for maybe, you know, 10 days to a couple of months and practice with these different strategies. So thank you so much for joining me. Please hit the like button, subscribe to the channel if you haven't done so already. Make sure you follow Mr. James Boyd and I in the Land of X, James Boyd CS and Barb Armstrong CS, and have a really awesome rest of your day. I want to thank James for all his work in the chat and the guys behind the scenes for helping me bring this webcast to life. Take care, everyone. We'll see you next week.